Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody had a great week. Let's get right into it. The theme for this week, again, range trading. So we have pretty much nothing really moving. Last week I thought maybe we were going to get out of these ranges, but apparently that has not happened. One of the things that I will note is we've got obviously a bunch of earnings next week that could move the market. We got Meta, we've got some of the actual mega caps that are actually big components of the NASDAQ 100. One other thing that I would note, again, a little different is we are now 3 weeks in, almost a month into this range. This last week, we had a massive compression in the ranges. In other words, the ranges are becoming much more compressed. They're getting narrower, which implies that we are, and again, whether it happens next week, obviously you've got PCE on Friday. We've got all the mega cap earnings. So we do have some catalysts that could possibly get us out of here. So we'll see how that goes. On the NASDAQ, we've got 13,400, 13K, so it's about a 400 point big range. However, for the week, we actually have a much smaller range for the most part, between 13,200 and about 13,000. So this low here at 13,000 is going to be actually not the 13,000, but the pivot low recently, right around, let's call it 13,923 is going to be very, very critical coming into next week. And the reason I'm spending a little time with you on this is because the NASDAQ has been, the mega caps, as you know, have been really there's literally 5 stocks that have been propping up the market. And, as you know, that's Apple, Microsoft, Amazon, Google, Meta, so on and so forth. So those 5 stocks literally have held the indexes up. Everything else is kind of just meandering or just sideways. Even the semis actually were hit today. And so, the rally is very narrow. And I do expect if they cannot hold up, then this market's going to give way, next week at some point. Could rally too. I mean, if they have blowout earnings or whatever, but any kind of big disappointments for Microsoft or Meta, I think are going to probably drag this market down. So in any event, that is where we're at. So to that end, we did buy some SQQQ calls on the close today here at TTS. So we're long SQQQ calls going out 2 weeks. We're still short the euro. I think I mentioned that. We did get out of gold and looking at a bunch of stuff for next week. We've got some grain opportunities coming up. Generally speaking, everything has been in a range. Oil also, came down but didn't fill the gap. I mentioned we were trying to get long gold oil, so that didn't actually fall far enough. We actually did get a little bit of a bounce. Nat gas is also just very tightly coiled up around 220, 221, the 220 to 225 level as well. And the dollar also, so a lot, the dollar 101, 102.22, 101.67, 102.22. So if you're looking at your charts, you can see that pretty much, dollar, bonds, equities, all tightly wound up, and part of that is very simply a reflection of the mixed earnings picture that we've had this week, the mixed messaging on the economy. On one hand, we got a weakening economy. On the other hand, we still have higher inflation. We still have the Fed probably going to raise in May. So all of these conflicting signals, lack of volume, lack of commitment, that is all resulting in this kind of listless, lackluster trading, which for some traders can be really frustrating. It's tough to get any kind of traction on anything. There are markets again. Gold also is in a range now between 1980 and 2025. So there, if you're willing to trade the ranges, I think there's some opportunities. But generally speaking, that's really the theme for the week. And I talked about this yesterday. So it's been a challenge for anybody trying to trade this, unless you're super nimble or whatever. And so we've been largely keeping our powder dry at TTS, but we are getting ready for next week because again, we actually finally are getting some catalysts. And we'll see how that goes next week. But other than that, really, it's going to be a short video because literally since we were together on Tuesday, we haven't really had any kind of material movement to speak of, right? I mean, it's been very, very, very quiet. Now, some people will say, it's a dull market, but the VIX, the one thing also to keep in mind is the VIX sitting around 16, 17. Generally speaking, that is the calm before the storm. The only unknown is we don't know what is going to cause that. Again, probably, miss earnings or whatever. I think a lot of the positive news has already been built into the market. So we shall see. I mean, it's really, really interesting. And so I guess the watchword for every trader this week is, to stay patient, don't overtrade, because if you keep your powder dry, you will have opportunities next week. Lastly, is with the VIX at 16, and I will, any of you that are listening, that listen to watch these videos, with the VIX at 16, if you have some nest egg long-term money in the stock market, okay, and you're maybe a little bit nervous about the economy, the economy's clearly going into recession, you're nervous about interest rates or another bank failure or whatever makes you nervous right now, what I would urge anybody to do is, if you are in that situation, with the VIX at 16 implies that the buying SPY puts right now is exactly where you want to be buying. It's very, very cheap to buy basically an insurance policy against your stocks, against any portfolio that you own longer term. If you're nervous, okay, because this is typically, historically, when you're coming into the mid-teens in the VIX. This is not to say that the market can't go any higher. In the 90s, we have VIX very low. If it's a different regime, then we stay very the VIX stays low and volatility stays tamped down. But I don't believe we're in that situation. That's usually when rates are at zero. You have a booming economy. So we don't have that right now. We have a bunch of variables out there that can really knock this thing down. So that would be the last message for you today. Is if you are nervous with volatility as low as it is right now, this is the time to be putting on some insurance. Not wait for the market to sell off sharply. Pay huge premiums for puts. When the market's calm is usually when you can buy insurance for cheap. Okay, so that would be a message I would convey to everybody. Again, all the levels I gave. Let me just finish up a couple levels. Core, all the grains are rolling to. Let me focus on the grains because those are moving. So again, focus on markets that are moving. Let me just go through some levels. Soybeans, July. Now, all of these are basis July. You've got July soybeans. We got some really nice levels around 14 a bushel on the July soybean contract. July wheat around the 660 level. Got some really nice levels down there. Corn, there's a around the $6 level. So if you're interested in trading some markets that are actually moving versus the rest of these markets, like the averages and whatever, I mean, clearly they're going to start moving, but for now, focus on markets that are moving. So those are, I'll give you some levels there in the grain markets and all basis July, because we're getting contract rollover. Oil, we've already talked about that. Oil still has that open gap around 75.70. And on the currencies, Canada is the only one that's moving. So Canada's been falling steadily. Got some great levels down around the 73 on Canada. Let's see what else. The euro's stuck in a range. We're still in it, but it's been just stuck in a range. Lastly, this is not till Thursday, so I'll get to talk about it on Tuesday. We have Bank of Japan next Thursday, and the yen has been falling steadily. I mean, it's been in a very kind of whippy, sawtooth manner, but there are some levels in the Japanese yen that could be interesting for next week as the Bank of Japan announces. We've had initially some volatility in the yen, and then it kind of dried up, but it looks like it's moving. So something for you to pay attention to. Okay. And then the dollar's ready for a breakout similar to the stocks. In fact, I think if stocks break down, the level I just mentioned earlier, if we have either a big rally breaking out to the upside on stocks, then the dollar breaks down and touches 183 again, or even going lower than that. But if we get a break to the downside in stocks, if let's say the S&P breaks 4,100, which is really the key level I'm looking at on the S&P, then you probably get a nice break to the upside and take the dollar. The dollar probably goes back up to 103 for the first attempt, and then even higher. So all of that setting up for next week. Obviously, nobody knows anything, but the fact that we've been range trading now for going on a month leads me to believe that we are ready for a break. I said that last week. Clearly, that didn't happen. But that it will happen at some point. So you got to be ready. And in the meantime, keep your powder dry and be patient. Okay. So that's really going to do it for this Friday. Today's the 21st. Lastly, I have a newsletter. If you guys want to sign up for the newsletter, give me a thumbs up, put some commentary. Want to keep growing the channel. I also am running a promo. If you want to know about that, link the bottom of the screen. It's my summer sale, if you will, for just picks on the futures market. We are actually positive year to date, actually pretty nicely on the futures, on our futures trading with smaller accounts and so forth. So if you're interested in that, I'm sure some of you that are subscribed to the newsletter have been previous members, have probably gotten that. So that, and then I am going to set up another class. I'm thinking probably a week from Tuesday, we'll have another class. Also, if you're wanting to attend that, you can also hit the link, and we'll notify you as soon as I set it up. I'll probably be tweeting about it. Other than that, everybody have a great weekend. Again, calm before the storm. And by the way, when I mean the storm, I'm not just, I'm not going to get locked into the market going down. The market could break out to the upside. Who knows? That seems unlikely, but in this environment, you just never know. So you got to be prepared and ready for anything, especially with the current environment we're in, especially with the mega caps all reporting next week. Which, by the way, a lot of the stocks that have reported so far, which is 25% of the S&P, have not had as big of influence. Maybe perhaps Tesla yesterday did kind of put a drag on the market, but not to the extent that I think a Microsoft or a Amazon or a Meta or some of these others. And then the big one obviously is Apple coming up in a couple, I believe it's the week after that. So, okay. All right, everybody, have a great weekend. Again, give me a thumbs up, put some commentary in. Let's grow the channel. And I'll see you next Tuesday. Okay. Have a great weekend, everybody.